Welcome to the Informed Minority, where we break down the markets using ICTConcepts. Today, I will be breaking down the trade I took on Monday, January 6, 2025, the MNQ long and high resistance conditions. If you're ready to level up your trading game, you're in the right place. Let's dive in. Here's the trade that I took. The blue arrow is where I bought. The down or red arrow is where I sold my position. So this is how the Forex Factory economic calendar looks at the beginning of the week. As we see, we have FOMC and we have NFP this week. So with knowing that we have FOMC and we have NFP, there are certain things that we're going to have to filter out. We want to be trading in the earlier parts of the week. So this is how I ended up filtering the days I wanted to trade and which ones I did not. Tuesday was a pretty good day to trade. It was really low resistance. As I'm filming this, it is Wednesday. Sometimes that may happen where you'll have days that you deem are not as high probability and they end up being pretty good days to trade. The reason for me why I didn't touch it was because with FOMC minutes Wednesday today, I was not interested in trading the day before FOMC minutes. So that's how I ended up filtering the week. So these are the days that I believed were the best for me, which was Monday, Wednesday after FOMC minutes, and Friday post NFP. So this is the higher time frame chart that I use to help flesh out direction and bias. So last week, as we saw, we had SMT at the lows with ES. So that gave me some confidence this week as I would see, at least on Monday, some higher price action. And I was aiming for, again, the consequent encroachment of this weekly wick that you see here. And also we had a daily fair value gap, which was right below that. So there was some good targets for me to look for the upside. Now, again, we always have to have some type of framework, some type of narrative that can help us frame the trade. Even though we may think it's going to go a little bit higher, we need to have something that is going to be supporting it in price action. We don't just buy because we think it's going to go higher. We have this, which there was SMT there between ES and NQ. So we had some strength in S&P. That gave me the confidence that we could potentially see this also going higher, as well as the bodies respecting this new week opening gap from December 29th. Now my target was the new week opening gap from December 8th, 2024. That's where I was looking for it to aim. Now, it doesn't always have to get up there. It did get up there. The screenshot that I took just doesn't show it actually reaching fully up there. We'll get into why I closed my position where I did. Because I was able to recognize the market conditions, that also affected the thought process of where my take profit was going to be. So we have SMT. We had SMT at the lows. But something that I have gotten used to doing now is while I'm looking at my trades, I'll look at ES and I'll look at NQ and I'll look to see is ES supporting my trade. And if it's not supporting my trade at the right time, I will opt to not take a trade. So when I was watching this, actually, ES was lagging a little bit, whereas NASDAQ was showing strength. So once I started to see us trade above these down close candles after we traded into this fair value gap, I had the confidence to say, okay, this is most likely going to go higher because ES is supporting what I want to see in NASDAQ and also my overall direction, which would have been bullish. Now we also have to, again, there's some supporting factors that need to stack around the area. I will make a YouTube video that will be called stacking, where I'm looking at specific areas of higher time frame PDRAs. But as you see here, we have stacking of first presented fair value gaps. But also notice how the first presented fair value gap forms later on in the day on Monday, January 6th. It forms at 9:40, which is a little bit later. And that is letting me know personally that I should probably wait until 10 o'clock to get into the trade. We see that we have the 950 macro and the 1010 macro. And so we were post 10 o'clock because we had a late first presented fair value gap. And that's just the way that I read the charts in terms of when the first presented fair value gap is presented. Again, in multiple videos, I say that if it's formed before 930, I really like that, especially when it's early on, 931. 932, 33, those times, I'm really interested in those ones. And it lets me know that we're probably seeking I would say, low resistance conditions. Now, this is what I do every single day. This is how I mark my charts up. And I do this so I can get the repetition of knowing what I'm looking for. And when I see it, I know it. I'm not guessing while I'm in the trade. If it does not have these key signatures, I'm not interested in the trade. But as we see here on the 15-minute chart, look how the bodies are respecting this fair value gap. They're not even closing inside of this fair value gap. Now, the wicks do the damage. We already know that, but the bodies are telling the story. When we see this and the bodies we're respecting, we already have the narrative that we're going to be looking for higher prices. And the chart is showing us that it wants to go higher, right? We also have this key signature. Just like the last videos and all my previous videos, we see that price is staying in the upper portion, letting us know that it's extremely bullish at the time that I'm looking at the charts. We fail to even close and get into consequent encroachment of this gap. So it's letting me know that there's a little bit more strength to this market right now. And so when I was looking at buys, this let me know that I was on side at this time. Here's the 5-minute chart. I'm gonna go back. I get a lot of questions about how do I know it's gonna be a breakaway gap, or how can I anticipate a breakaway gap, is when I see signatures like this. So this is staying in the upper portion on the 15-minute chart. I like to go down to the 5-minute chart. What do I see forming in the upper portion of a higher time fair value gap? So in this case, on the 15-minute chart, we see an order block, a 5-minute order block forming in the upper portion of this 15-minute fair value gap. I love seeing that. I love seeing things stacking in the upper portion when I'm bullish, and I like to see things stacking in the lower portion when I'm bearish. This is a breakaway gap, and I would be anticipating, if the market is very strong, that this candle would hold it and not allow it to go down to this lower level, which is exactly what I would want to see if I'm looking for bullish price action. It can come down here, but this is letting me know that it's a lot stronger because it's unable to get down to the lower portion. So we have stacking. It actually fails to get to this order block, which is letting me know as well that it's more likely to go higher than lower at this point. So when I see this order block, it also fails to get down to this, which is also letting me know that it's, again, strong. It's showing strength at the moment. So I don't want to be looking for sells right now. So when the setup arises, if it does, I'm looking for buys. I'm not necessarily looking for sells. So now we go down to the 1-minute chart. Again, we have the first presented fair value gap. It forms later at 9:40. So what does that tell me? I have to wait till after 10 o'clock to take the trade. At 10 o'clock, which is roughly, you can say like right here, there's nothing there for me yet. It comes down, hits the first presented fair value gap. Since we know it's high resistance conditions, we're looking for reclaimed PD arrays. It comes down again, it comes down again, and then finally when it's time for it to leave, it comes down, expands away, creates a fair value gap, and here's the breaker. Remember, we had layered, let's go back so we can show that. We had layered first presented fair value gaps here on this breaker there with this fair value gap. So it gives you more confidence when I'm in the trade when I see these things. Even if I lose the trade, I still take the trade because I see the things that I want to see in price in my favor. It's all working together and it's all combining. So it gives me the confidence to take the trades when they present themselves. But when they do not have these signatures, I'm unwilling to take the trades. It doesn't look how I'd want it to look. Let's say, for instance, the fair value gap was down here. Less likely to take that trade because it's forming outside of this breaker. So I'd probably wait to see if it does something inside of here in the upper portion. Again, that's what I'm looking for. I want to see upper portions when I'm bullish being held at bay and not allow it to trade lower. That's the signature I'm looking for in all of my trades. So here's the macros throughout the day. I was specifically focusing on the 950 to 1010 macro, and that's where the trade ended up happening a few minutes after. But the 950 to 1010 macro set the stage for me to see a trade setup forming. Now, I like trading around the macros or during the macros because as you look and can see here, most of the turning points happen during macro times. So I should be focusing around trading around those points. And when I see what I call the stacking of PD arrays or overlapping arrays during a specific time, and I'm seeing the signatures, that to me is a high probability trade. Even though this is in low high probability conditions, I'm talking about a trade setup that is forming around specific time elements and key signatures. That's what I'm looking for. Something else that I thought was really cool, I will grade the opening range. And if we look here, and the opening range is from 9:30 to 10 o'clock, and look how we respond off the mean threshold of that range. It's good to note things even after the fact because this was something I was not aware of or not really paying attention to for this specific trade. I think it's cool that we have the first presented fair value gap is at the middle of the opening range. That's how we trade back down to it, then we expand and trade higher. So I think that's something cool to note there as well. This is just a trade from start to finish, this fair value gap that I bought in. And then here's the end of the trade. So notice how we look at the 950 to 1010 macro, and notice how it gives us what we're looking for, expansion, some type of movement away from a level that we're already expecting price to move away from. So that's like the key element when you have the expectation to see it do something. And if it does not do it, then there's nothing there for you to do yet. You're just waiting for price to show you what it wants to do. Now, what I do with all my trades is I take data, and for this trade specifically, it was a premium premium gap opening, which means yes, we'd be looking for lower prices in the first 30 minutes. But from what I was seeing on the chart is that was not forming yet. So I'm not just going to sell just because the opening range gap is in a premium, right? I can't just randomly do that because it's a large opening gap. But the time that I was in this trade was 13 minutes. The amount of time that I was in drawdown out of the 13 minutes was 1 minute, but almost immediately I was pretty much out of drawdown, which is letting me know that I had a good entry. The amount of handles in drawdown I was in was 3 handles, and the amount of handles that I booked for this trade was 51, and the total handles it went up was 62 handles. The macro that I used was a 950 to 1010 macro. These are metrics that I take regardless if I take a trade or not. If my setup forms and let's say I'm out, I will still take the same metrics, and if it's a win or a loss, it doesn't matter. I still do the same things. I look for my specific trade setup, so when it occurs live, I know what it looks like, I know what I'm looking for, I know what I'm waiting for. And those things are all elements that you will gain as you are doing back testing. You go back and then you forward test and then you paper trade and then you demo trade. When you do the process the correct way, you gain that level of confidence that when you see your trade, you're just chilling while you're in the trade. You understand it's there, you understand how many times it forms, and those are things that are important to gain the consistency that every trader is looking for, and it's the consistency that I was specifically looking for. I like to end my videos always with how can I improve for going on to the next trade, the next week, and also what did I do well in this trade. So, what can I improve on? I think I moved my stop up slightly early. The reason why I say I moved up a little bit earlier is because we were trading in high resistance conditions, so it could have come back down. I wouldn't have wanted to see that, but there's a potential for it to come back down. So moving it up a little bit earlier like that, there could have been a potential of me getting stopped out prematurely. So that's why I say that for this specific trade, that's something that I would have needed to work on that I can improve going on to the next trade. What did I do well? Patience was very key today in understanding the market profile, which was high resistance. So I know there's going to be a lot of overlapping, it's going to be slower to get to where it wants to go or where it's supposed to go. It's going to take a little bit more time. The second thing I did was I took the trade when it presented itself with the proper narrative. So I held the same narrative, the same bias. When it was just trading up higher and there was no real entry for me, I didn't take anything. I was just waiting for a specific setup that I wanted to see that fit my model, that fit my criteria. The third thing I did well was when I saw this second fair value gap form, I really wanted to move my entry up to this and just so I could get in. But I told myself that this is what I want to see. I want to see it come back down to here. And if it doesn't come back down to here, then there's a no trade for me. And I was okay with that. And I'm really proud I left it where it was and I didn't move it. And also I let the charts tell me when it was time to take a trade because I was watching ES the whole time. And when ES finally broke above its high and maintained that strength that it was showing early on, that let me know that it was time to take this trade. I'm really glad about the patience factor that I was able to gain from watching the ICT 2024 mentorship. It's in this video where I talk about becoming a profitable trader and the things that I did to help me get to the point where I am now reading price action the way I do now. That is it for this episode. Thanks for tuning in to the Informed Minority. If you enjoyed today's breakdown, don't forget to like, comment, and subscribe if you'd like to follow along with my trading journey. Your support means the world, and I'm looking forward to seeing you in the next video. Peace.